In 2022, $600 million vanished from the Ronin network in a single afternoon, leaving institutional investors in total shock. This wasn't a complex hack, it was a psychological trap hidden in plain sight. I analyzed the specific social engineering pattern used in the three largest crypto heists in history. Behind every drained wallet is a common invisible red flag that most traders ignore until their balance hits zero. Here is how they did it. So grab a drink, find a comfortable spot, and let us break down the anatomy of these massive failures. It is easy to think you are too smart to get scammed, but the history of cryptocurrency is paved with victims who are just as careful as you think you are. Let us get into it. The first method, and perhaps the most common way money vanishes, is the classic liquidity exit scam, often masked as a legitimate decentralized finance project. Imagine a platform promising you returns of over 1,000% in a matter of weeks. It sounds insane, yet people flock to these projects every day. Think back to the SQUID token incident in late 2021. It was a token inspired by the popular television series, and for a few days, it looked like a dream come true for investors. The price skyrocketed from pennies to over $2,000 per token in just a few days. But there was a catch that nobody noticed until it was far too late. The developers had hard coded a restriction into the smart contract that prevented anyone from selling their tokens except for the creators themselves. They essentially created a digital walled garden where money could only go in, never out. When the developers finally hit the sell button, they drained the liquidity pool, effectively stealing over $3 million worth of user assets in minutes. That is the easy win for scammers. They prey on the fear of missing out, or FOMO, as it is commonly known. If you see a project where the code is not transparent or the liquidity is locked by the very people who created the coin, you are likely looking at a trap. Now, let us level up to the second, more dangerous method, the elaborate exchange insolvency strategy. This is where things move from simple code exploits to complex financial deception. You might recall the collapse of the FTX exchange in November of 2022. It was the second largest crypto exchange in the world at the time, led by a man named Sam Bankman-Fried. Investors thought their money was safe, sitting in a regulated high-tech vault. The reality was that their funds were being siphoned off to cover losses at a sister hedge fund called Alameda Research. It was a classic bank run scenario dressed up in modern technology. When the dust settled, regulators found that over $8 billion in customer funds had gone missing. Think about the scale of that for a second. $8 billion is more money than many small nations have in their entire treasury. The lesson here is simple. Never leave your assets on a centralized exchange if you can avoid it. If you're finding this breakdown helpful, hit that subscribe button. I drop deep dives into financial mechanics like this every single week. If this is clicking for you, a quick subscribe helps me keep digging into these stories. All right, we have covered the simple scams and the institutional failures. Now, for the one I have been saving for you, this is arguably the most sophisticated scam in the history of the industry, and it is a masterclass in psychological manipulation. The OneCoin scheme was not just a scam. It was a global phenomenon that spanned from 2014 to 2017. Ruja Ignatova, the so-called crypto king, didn't use complicated code or fake exchanges. She used the power of human connection and legitimate business conferences. She traveled the world, renting out massive arenas like Wembley Stadium in London, hosting events that felt more like rock concerts than investment seminars. She promised a coin that would replace Bitcoin, calling it a safe and secure way for the common person to get rich. The reality? There was no blockchain. There was no technology. It was a multi-level marketing pyramid scheme of the highest order. She convinced millions of people across 175 countries to invest their life savings. By the time the authorities caught on, she had vanished, allegedly taking over $4 billion with her. Think about the fact that this woman is currently on the FBI 10 Most Wanted list, and she is still missing. That is the ultimate payoff for these scammers. They do not just take your money. They take your trust and use it against you in ways you cannot even imagine until it is far too late. Let that sink in. That one shift alone, the realization that they target your need for community and status, is far more dangerous than any faulty code or bad exchange policy. Once you see it this way, you can look at any pitch and immediately see the underlying mechanics of the deception. So there you have it. 3 real ways that people have lost billions. And the OneCoin story alone shows you why social proof can be the most dangerous indicator of all. If you got value from this, share it with someone who needs to hear it, and subscribe so you do not miss the next deep dive into the hidden world of finance. My next video is going to explore why central bank digital currencies are shifting the landscape entirely, and is a topic that will change the way you think about your bank account forever. Thanks for sticking around, and I will see you in the next one. Stay sharp out there. You deserve to keep what you earn. We have looked at the technical exploits, the institutional failures, and the psychological traps. The common thread isn't just greed, it's the speed of the environment. Scammers know that if they force you to act quickly, you will not have time to check the documentation or look for the flaws in their logic. The SQUID token lasted days. FTX lasted years. OneCoin lasted long enough to span the entire globe. Each one followed a pattern of escalating pressure. They make it seem like if you do not join today, you will miss the biggest opportunity of your lifetime. But as you can see, the opportunity was always just a mirage. The security of your assets is your responsibility, and that starts with slowing down when everyone else is rushing. If a project demands immediate investment to secure a limited spot, take that as your signal to exit. If the team is anonymous and the code is closed source, assume the worst. If the promises of return defy every basic law of economics, assume you are being lied to. These are the guardrails that keep your portfolio safe in a wild, untamed market. It is not about being cynical. It is about being smart. By understanding the history of these scams, you are already miles ahead of the average investor. You are not just learning about the past, you are protecting your future. Keep this knowledge close and remember that when something seems too good to be true, it is almost certainly a disaster waiting to happen. It is not worth the risk. Your peace of mind is worth far more than any speculative gain. Take care and stay informed.